Hi guys, and welcome to the weekly forecast video. And today we're going to look at dollar index, as is the case always. Now, first things first, let's look at the calendar just to see what's coming up ahead in the week in regards to dollar mainly. And of course, you have to keep in mind of the other pairs that you are trading. Now, Monday, we didn't have much. Of course, we had the FOMC member speaking, and then with the JOLTS job openings. That pushed dollar a bit to the upside because it was positive. And then tomorrow, which is Tuesday, we've got a short-term energy outlook, and then we also have the German economic sentiment that is definitely going to put some volatility on euro. And then Wednesday, we've got the core CPI. We've got some inflation news on Wednesday. Yeah, that's definitely going to move the market. Then we also have crude oil inventories. That's for the dollar. So expect volatility during the mid part of the week. Then Thursday we've got Great Britain's GDP for the second quarter, and then we also have manufacturing production for the pound. Then we've got initial jobless claims. This is going to tell us the number of people who are signing up for employment benefits. You know, those guys that are out of work, you have to go and inquire or sign up for your, here we call it the UIF fund. So those ones are the initial job loss claims. These numbers, they are quite important in that they give us a guideline on what to expect for NFP in September. You see, so every week there's initial jobless claims report that comes out, and if there's more people claiming employment benefits, it means more people are out of work, and then NFP number might be less. So yeah, it's a report to keep an eye on if you want to really trade NFP. Then Friday we've got not much. There isn't much fundamentals on Friday except for the employment change for Aussie, then trade balance for the euro, and then we also have nothing much to shout on about in terms of volatility. So expect Friday pullbacks come August the 18th. So yeah, that's basically what the calendar is telling us in a nutshell. Yeah, of course there is going to be volatility this week. Sometimes it turns out to be a bit a quiet summer in the market, normally August, but come September then you see a prolonged volatility. But I don't see it being the case this year. I expect August to be quite volatile. Now, looking at the COT number for dollar index, we have seen that the non-commercials, they've increased their long positions, not by much, just by about 2,000 positions, and they've reduced their short exposure by about 1,000 or so, not even 1,000, almost maybe like just above 700. And then the commercials, the guys who hedge against the non-commercials, the commercials, they've increased their long positions by just a couple of 300 positions, and they've also increased their short exposure by about 1,200 positions. That's not much comparing to the gap that we saw last week from 18,000 to 23,000. Now they've increased again their short exposure by just about 1,200, and they've increased their long exposure. Not much, but they're still extremely net short. Now, what does this tell us before we go to the chart? Now, we're looking at dollar index in the coming week. We saw the NFP number, right? It was a huge boost number for the US economy, and conversely we saw the dollar trading to the upside. It regained almost 1 week's losses in 1 day. Now we cannot ignore that number, NFP number. Yes, commercials, they're extremely net short, right? And then if we look at the non-commercials and the commercials net positions, there's only a difference of about 5,000 only. That's not much. So when we go to the chart, right, we can see that dollar is trying to regain the losses that it incurred in July. July losses, they're almost completely erased. So we need dollar to trade just above 93.20 for it to erase all the losses from July. Now, when we looked at the number and the fundamentals and putting into consideration the NFP number that we saw on Friday, I'm expecting dollar to trade to the upside in the coming weeks. The weeks leading to Jackson Hole, they're going to be crucial for dollar. I'm seeing a gradual regaining of strength on the part of dollar. Now, where is dollar going to regain up to? First target is 93.20. Then we head to 93.50. I'm expecting dollar to trade above those 2 price points that I've mentioned. That means I am bullish on dollar index. Conversely, I'm going to be shorting the majors: Euro USD, Pound USD, Aussie dollar, New Zealand dollar, and I'm going to go long on USD CAD, USD CHF, and USD JPY. But the analysis that I'm going to do here is only for the dollar index, and it's not much, there isn't much new to talk about, because if you have been following through with the weekly forecast that I've been publishing, you see that most of the levels, they are already marked on the charts, like the 2 targets that I've already mentioned to say expect dollar to trade above 93.20 and 93.50. Expect dollar to trade above. Ultimately, we should see dollar trading all the way to 94.30, but that's probably 2-3 months from now, unless if something drastic happens. You see, now looking at the weekly chart, you see the gains that I've been talking about from last week. Last week almost erased all the losses that dollar incurred in the last week of July. Now this week opened higher and we traded to the upside. Now price has formed 2 equal highs right here. Let me mark these 2 equal highs. We've got 2 equal highs right there. Now this week the high was at 92.965, and then this one also, the high was 92.965. so these 2 highs, they are literally equal highs, the current week's high and 2 weeks ago's high. Now what lies above those highs? There is buy side liquidity, there's buy stops. Now the buy stops that I'm more focused on are sitting above 93.20. That is my target on dollar index, meaning now I have to define my discount range, an area where I expect price to trade down to before it rallies to the upside. That's my discount range, and my targets 93.20 and 93.50. Now, weekly bullish order flow. I'm expecting the low of the week to come Tuesday or Wednesday. Now, as long as price is trading below 92.780 on dollar, which is the weekly open, as long as price is trading below 92.780, I'll be hunting for long trades. Now I'm gonna go to the daily. Now this is our daily chart. You see those two equal highs here. Price is definitely gonna trade above here, there's no doubt about that. But this is our 93.20 price point. Now look what's in here. We've got this high here and this low. Today's low and Thursday's high. Today's low and Thursday's high, they're going to offer us discount opportunities, right? There's going to be discount range in that area. Let me just mark it out. So we've got this range here in price. I'm expecting price to trade mainly to 92.50, right? 92.50 before we see price shooting to the upside. An entry to the upside at current price is only gonna increase your risk, because it means you're gonna have a huge stop loss. When we go to the daily chart, to the H4, so that was our daily. Now you see this price point here, 92.71. 92.71 is an ideal area for price to trade lower to before we see another push to the upside. But now there's this price action here that I would like you to focus on. We had this consolidation Friday up until Monday New York session. We had a consolidation and then there was this expansion, right? You see the expansion that happened on dollar index. What I'll do is I'm gonna open a different chart so that I can explain that perfectly. Now I'm on a different chart, but it's still dollar index. We had an expansion from an area of consolidation, right? Now remember, elements to a trade setup. The order block that price leaves during the expansion. When price comes back to that order block, you'll be looking to go long, as in this case. This is our last down close candle before this push to the upside. And if you see this candle here, it opened 1600 hours New York open. Now if I go to H1, right, now on H1 you can see this candle originated right from the 50% mean threshold of this equilibrium point, this range here of 20 pips. We had this expansion almost 10 pips into the range. We had an expansion. Now market is consolidating again, so expect price, when price retest this level here, 92.80, expect a push to the upside. This expansion here, you can further analyze it using institutional order flow. You see we've got our fair value gap right here. You see I've only taken a certain part, like the current price action on dollar. I've taken the current price action, specifically the last 24 hours, and then we have a fair value gap. You see, so inside this range we've got this low here that was created today. This is today's low and potentially today's high. We grab our fibs, low to high, price below equilibrium point, so that's this range here, all the way to 79%. Price is in discount. You see, price is in discount range. What order flow, what premium, what PDR metrics that we have there? We've got a bullish order block on H4 in that range, and then we've got a fair value gap. We've got a liquidity void that should be filled to the downside before we see another push to the upside. So further as you go on to lower time frames, right, you can clearly see where price needs to trade to before it starts finding support, right? Since I'm bullish on dollar, I'll be focusing on this chart pattern here, the consolidation, expansion. We're probably gonna get a retracement back into the consolidation before another push to the upside. So the further you go on to lower time frame, you'll be reducing your what? Your risk. You can clearly see this is our discount range, the area between equilibrium and 79% retracement range. That's our discount range, and in that discount range you're going to get what? Discount arrays. You see, fair value gap, liquidity void, bullish order block. So expect price to find resistance, to find support on dollar between 92.84 and 92.76. I'm sure that's plain clear. It cannot get any clearer than that. So it's this bullish order block that I'm talking about here. Once we drop down to lower time frames, let me just remove the fibs quickly. This white shaded area, that's our discount range inside the H4 bullish order block. Now if we go to 15-minute, expect, now we are on 5-minute. You see, this now helps you to reduce your risk, such that when price comes inside this range, you wait for a specific hit of a certain price, say for instance 92.80. Any price point below 92.80, dollar is in heavy discount. To be ideal to go long, but for you guys, I advise that you go as low as 15-minute and 30 minutes. You see, because price action is going to be much clearer on those time frames. So right now, expect every down candle on dollar index H1 and H4. Expect every down candle to provide support before we see another move to the upside. So I'm bullish on dollar this week, meaning I'm going to be bullish on yen. I'm going to be bearish on NZD USD. I'm going to be long USD CAD. I'm going to be shorting pound USD, and I'm also going to be shorting euro USD. I'll be hunting for short trades on fiber and cable. As you can see, euro is heading for 1.160. That's where euro USD is heading to. And as for pound USD, we are heading down to 1.36. That's where we are heading. So yeah, that's pretty much about it for this week. Oh yeah, and one thing also, Brent, for the guys in the group, remember I sent you this analysis here on Brent crude oil. Remember, our short entry was right inside this bearish order block right here, and you can clearly see perfect price delivery. Perfect price delivery on Brent. We had Brent crash today back to the classic breaker. So yeah, that's pretty much about it for today, guys. And if you have any questions, just send me a message on the group and we can take it further. So for those who haven't joined the mentorship, unfortunately you are going to see this analysis later on in the week, probably Thursday or even Friday. It all depends if I remember to make it public. But if you are in the mentorship, you are going to receive this video in your inbox and on the group just before New York Open on Monday. So yeah, I wish you guys good luck and happy trading in the week. Thank you.